Hi, everyone. Welcome to the Capital Raiser Show. I'm your new host, Weston Walker. It's season 5, powered by the Family Office Club. Today we have Ben Kogut, and he's the founder of Rooster Equity. He's raised 112 million across 44 deals, and he has 18 years of commercial real estate experience. Ben, welcome to the show.
Yeah, glad to be here, Weston. Thanks for having me.
For sure. Yeah, so give us a little bit more about your background and the 18 years of experience you have, and then the types of people you help.
Yeah, after graduating the University of Texas, got right into commercial real estate, started as a real estate broker and was making money doing that. And then discovered, I was looking for somewhere to invest my money and invested in a syndication project. And then that was how I discovered the world of capital raising. And so decided that I loved it. I'm passionate about it. I love teaching people about it. And basically transitioned in 2017 from being a commercial real estate broker into being a full-time capital raiser and syndicator, now a fund manager. And so it's been a great journey, and yeah, happy to share more about that.
For sure. And yeah, and you've raised 112 million. Our show is called the Capital Raiser Show. We help operators like yourself raise more money. So give us the rundown and the overview of how you raised 112 million.
It's all about relationships, which we already all know, and education and finding good deals, finding good partners, and just always, working. So it's there really is no secret to it other than just keep moving forward and do the best that you can on a deal by deal basis. And so that's what I would say to that.
Was there a specific strategy that you used that you found most successful?
Yeah, I find that investing in triple net properties has been what's been most successful. I think that most people that are in our industry are raising capital for multifamily. And now you see a lot of people doing it in the storage space. You see people doing it in like the mobile home park business. Well, I basically took that same strategy and I've applied that to triple net. So in other words, we're finding single tenant and multi-tenant properties that are either retail, industrial, medical office, and typically these are tenants that are high quality, high credit tenants that have long-term leases, and we find ways to buy them at a discount. And once we do that, or we find a way to add value, like there's usually some angle where we're, getting the deal at a bargain price. And then, I manage an investor club of a couple thousand investors, and I provide educational opportunities to them in addition to opportunities for them to participate as a passive LP investor in our projects. And so
Yeah,
it's
tell us
really
tell us more about that, the investor club with 2,000 people.
it's Rooster Equity, roosterequity.com. It's really just people that I've been at this for over 18 years, so it's really just my relationships. Occasionally I have people reach out to me through the podcasting that I do, but that's it does happen, but it's not as often as you might think. Um, but really just a lot of referrals and just slowly growing the business, one person at a time. And that's really what I try to do. I'm not trying to find any shortcuts, and um, just um, just a lot of grinding.
And what type of education do you provide your investor community? Because that seems to add a lot of value to people. Giving free value gets them to trust you more. So, what types of education do you provide to them?
Well, yeah, I wrote a book. That was one. I wrote it about, it's called Mission Matters, and I wrote about the lessons that I've learned across investing in 44, well, at the time it was 40 something syndication projects, some of which I am the GP, I'm an LP in all of them. And, I think that there's just a lot to be learned. And so we talk about what's most important. I like to talk about unit economics. That's really what is most fundamental to a deal. In other words, if there's a tenant that occupies a triple net property, how many widgets do they have to sell in order to be able to break even, to be able to afford the rent that they're ultimately paying to us as a landlord, that is ultimately what we're using to pay the preferred return to our investors and so on and so forth. So we talk about all sorts of things that have to do with triple net properties, whether it be retail. We talk about how we do our due diligence, how we structure the deals, how we decide when to exit a deal, how we use AI, how we, there's so many different aspects to investing in triple net properties. So we're always trying to put out whatever latest, greatest materials we can and be a resource as best as we can for our investors.
Yeah, and talk more about triple net because triple net's a pretty passive asset type. And I was reviewing one for an investor that invested with me last year. And he was looking at mainly buying one himself because it's relatively passive if you own the whole thing, compared to something like multifamily, mobile home parks, etc. So, what's the advantage of an investor going through you rather than buying their own property?
Yeah, well, we have our own proprietary due diligence process. So that's number one. We're very thorough. Number two, we have deep relationships with the tenants themselves. And so that really helps when it comes time for either a lease renewal or occasionally we'll do what's called a blend and extend. And so having those relationships are really helpful. And, I think that, hmm, that's ask me another question. I kind of lost my train of thought. Sorry.
Yeah, yeah, no worries. How do you find the best deals? You have relationships with tenants you mentioned, and you've established yourself in the space. 18 years. So how do you find the best deals? Is there some kind of strategy you use? Give us the rundown there.
Yeah, so great question. We do a couple different things. We are looking for something very specific. We're looking for a high quality tenant. Usually it's a triple B credit tenant or higher with more than 5 years of lease term that we can acquire at a discount, usually somewhere close to a nine cap or better. And if we do that, so that I have an acquisitions team that's looking for that targeted type of triple net property. And every single day, we're looking at every single property that comes on the market, as well as we have a lot of deals that come to us off market, and we are making offers. So when we make an offer, we'll typically make a pretty aggressively priced offer within 24 hours of something hitting the market. And then we don't just send a letter of intent, we will send a purchase contract. And we will send it right away and we will send them a preemptive list of references as well. So we'll share with them, hey, this is who we are, and here's a list of people that will vouch for us that we do what we say we're going to do always. And then we also promise the seller or the seller's broker that we'll personally be on site within 2 weeks of being under contract. And so we buy properties all over the country. So we're constantly traveling right now. I'm calling you in from a hotel. I think one of the secrets to success is not only having a great reputation, but also being really aggressive about making offers. And so that's one of the big secrets to our success.
Yeah, and what are you seeing in the market right now with interest rates and triple net properties? Maybe they have kind of a lower cap rate than what the interest rates are in some markets. So what are you seeing in the market today in this election season?
Yeah, interest rates are definitely higher than they were a couple of years ago. We're not buying anything where interest rates are higher than the cap rate. So we're always obtaining positive leverage. We're looking for low leverage, so 50 to 65% LTV is typically what we're aiming for. And in today's market, it's going to be somewhere around the sevens and the interest rate, usually locked in for 5, sometimes 10 years. And so we are anticipating rates to come down. It's the middle of September right now, and if the the powers that be are doing what they should be doing, I think we'll start seeing interest rates come back down. We'll start seeing even more positive leverage, and in the triple net space, there are still many lenders who are participating in what we like to buy. It's a very bankable, easy to get loans on, get a lot of terms on. So from that standpoint, triple net is still a very competitive. They're still, competitive for the lenders to be able to make us, the right loan terms. So we still feel really good about where we're at with lending environment.
Hmm. Yeah, and you mentioned you buy seven caps. I'm in Scottsdale, and we we have five and a half caps. It's very expensive here. So, what cities are you guys targeting and submarkets?
So to clarify, we won't even buy a 7 cap. It's got to be probably closer to a 9 cap. Uh, we were we bought something in the eights that was quickly rising to a 9. So we were pretty geographically agnostic, but I will say that we're finding you find better cap rates in like secondary and tertiary markets, and so there's less competition in the Midwest. Also, as an example, I'm based in Austin, Texas, and we travel up to Kansas, Missouri, Michigan, Indiana, Ohio, that kind of central part of the country, as well as here in Texas. And so I would say like it's an area where there's just less competition, so you can get better yield, aka cap rates. And because we're buying high quality tenants that are on triple net leases, we're pretty much indifferent as to where they're located. And so that's been that's been great for us.
Hmm. Yeah, and what's your management structure like with you're from Austin, Texas, and you buy properties all over the country, and a lot of operators have boots on the ground in each market they invest in. So, what is your management like?
So management is kind of a tricky thing because management is basically two parts. There's the physical management, which I think is what you're referring to, and I'll talk about that. And then there's the financial management. So a lot of the deals that we're purchasing don't require any physical management. They're called absolute triple net leases, and so if there is, I don't know, a roof leak or a light fixture that goes out or a window that breaks or what landscaping issue, it's not our responsibility. It's the tenant's
Mm.
responsibility because that's what it says in the lease, which is very, very different from, let's say, an apartment investment. And so if it is a deal that does require some sort of management, like oftentimes multi-tenant shopping centers, as an example, require third-party management. So we will hire third-party management that is local to wherever that particular property is. And we'll bifurcate the financial side of it. So we'll bring in all the rent collecting and paying of the taxes and insurance and whatever expenses are. We'll bring that in-house with our own accounting team, and then we'll let the third-party management handle the landscaping and whatever physical issues are, because typically that management company has local relationships already in place. They know who to pick up the phone to call for the roof issue or the dumpster or electricity or HVAC or whatever it happens to be at that point in time. And so that's how we've been able to scale purchase properties in very geographically diverse locations and not really have any problems doing that.
Right. Yeah, it's definitely safer than like investing with someone like you who has triple net deals with third party management versus a multifamily value add deal with third party construction, third party property management, and they're totally out of state. They've never visited the property. I can't tell you how many times I've seen that. So, yeah, on to another note here. Um, what types of investors do you help? Because I saw on your LinkedIn that you're targeting investors with over $1 million.
Yeah, so let me clarify on that. So my investors are typically coming in for as little as $100,000. And to clarify, maybe I need to clean this up on the LinkedIn. What I'm doing is I started a fund, and my fund is designed to help other people who are GPs or have a great real estate deal, and maybe they need help with raising capital.
Hmm.
And so, with my customizable fund, I look to partner with those types of people, and I'm trying to bring no less than $1 million into a project. And so I find that, and you probably see this too. I mean, raising capital is extremely challenging. And it doesn't mean that there's not a lot of great deals, and it doesn't mean that there's not a lot of investors who want those deals. And so I basically partner with people that have deals. And so, like, let's say, for example, somebody's looking to buy a triple net property, just as an example, and they need an LP partner. And so they'll partner with me. I'll syndicate it to, my group of investors. They'll bring the money into my fund, and my fund will write one single LP check into that particular project. And so we basically balance those two different strategies where we do our own deals, but we also have the ability to go and partner with people and do deals with them as well.
Got it. And those are syndications, like one-off deals, or are they a fund with diversified assets?
So to clarify, what I have is a customizable fund. And so it means that the investors get to customize where their dollars get invested. So it's not like when people think of a fund, they think of like, oh, you put your money in and then the fund manager decides where to invest it. This is the opposite. This is I present opportunities to my investors, and then they invest in the fund, and the fund allocates all of their money into, let's say, deal A, and then deal B comes along and they don't want to participate in that one for whatever reason. And then deal C comes along and they do. So they can only invest in deal A and deal C and not have to be, exposed to deal B. And so that's
Hmm.
that's how we do the customizable fund.
Yeah, so it's fully transparent. Investors can see all of the details of the thing they're investing into. So is that through a certain platform? I know Avestor has something like that.
That's exactly right. That's through the Avestor platform.
Nice. Cool. Yeah, so give us more details on your plans for the future. Are you planning on sticking with triple net deals or pivoting to certain other asset types?
Oh, we're all in on triple net properties. That's what they all have in common. It still can be different asset classes within triple net, but we're only doing triple net properties. We have quite a pipeline of opportunities. My acquisitions team is constantly making offers, and so we think that before interest rates go down even further, or come back down further rather, we're trying to buy as much real estate as we can right now. So that's the plan.
For sure. Yeah, and you mentioned your acquisitions team, and you probably have some great talent there. So give us more details on your team and how you recruit the best talent.
Ooh, great question. So I have a lean team, but my head of acquisitions is somebody who has extensive experience in underwriting and analysis. And he came on very recently because I just needed help to keep growing all these analytical skills. And so he's just he was a friend. Honestly, I wanted to start with people that first and foremost would be loyal and would be passionate and were willing to let me teach them and learn from each other. And so that's one. I brought in my head of investor relations. He and I were childhood best friends, and he doesn't really have industry experience, but he's fantastic with people, and he is incredibly loyal. And so I wanted to bring him on to help me grow and make sure that we're taking care of our investors along the way. And then I also have a virtual assistant who is helping me with all of the marketing materials, keeping me organized, helping me keep my priorities straight. It's, sometimes scheduling and a bunch of random little tasks along the way just to help me be more efficient with my time.
Hmm. And are there any hiring plans for the future?
I think we're pretty set for right now. I do envision growing, but I haven't quite pinpointed what our next hire will be.
Hmm. Yeah, and what back to capital raising because you've raised a lot of money over your career. What mistakes do you see people make when they raise money?
Um, I think that mistakes, I have to think about that one for a second, but I would say people that aren't completely focused and completely all in this business. Like trying to have another career and then, one foot in the door, so to speak, as a capital raiser, I think can lead to mistakes, can lead to not, making bad decisions, making bad investments, not being able to take care of the investors, maybe missing some details. And so I think that is really what's most important is to be focused on doing one thing. I read that book by Gary Keller called The One Thing, and it really is what we do. Our one thing is raising capital and investing in triple net properties. We don't mess with anything else outside of that box, and it really has been our really one of the best things that we've done is just stay focused because it can be very easy to get distracted by balancing a variety of different things, and so that's why we just stick to our lane and keep our blinders on and focus, focus, focus.
Absolutely. Yeah, Gary Keller wrote a great book, The One Thing. It keeps it simple for sure. Yeah, so let's go into the lightning round. Just some quick questions for you to wrap up the show. Let's do the lowest hanging fruit to finding the best deals.
The lowest hanging fruit. I would say making offers. It's really that simple. You have to know what you're looking for and you have to know what values make sense for you and just make the offers. So
Mhm.
many times we get in our own way and we don't make the offer. And if you don't make the offer, you're not going to get the deal. And so I would say keep reminding yourself whether, there may be a big delta between what the seller is asking and what you think it's worth, but don't be afraid because you may get that deal, you may not get that deal. But oftentimes the broker will be like, okay, well, that person is active in the market. And then you start getting to see first looks at deals. So always make the offer.
For sure. Yeah, and what's the number one thing that you should look for in an operator?
Integrity. Somebody that you spend a lot of time with, you understand who they are, what their background is, um, what they're prone to do. Do as much due diligence and ask questions, find out see how transparent they are by asking questions and seeing what they are willing or not willing to answer. But at the end of the day, the real estate business is a people business. So making sure that you do business with people that you want to do business with is can't be understated.
Absolutely. What's the number one best market in your opinion to invest in right now?
Texas, Texas. I'm a Texan. Texas is on fire right now. I live in Austin. There's areas outside of Austin that are growing tremendously fast. Um, yeah, the secret's out about Texas, but I don't think that it's going to go down in our lifetimes. So if somebody's a long-term investor, I think investing pretty much anywhere in Texas is, without overpaying. But if you're in it for the long term, you're going to win.
For sure. Are there any submarkets in Texas that you like?
I like being hour to 2 hours outside of either Austin, Dallas, Houston, or San Antonio, because each of those, if you look at it, the trends, they're both just sprawling out. And so if you go about an hour to 2 hours, you're going to win.
For sure. Yeah, well, that wraps up the show, Ben. Quick shout out to our sponsors, the Family Office Club, Capitalist Pro, and Invest Next. Ben, thanks for coming on. How can investors and other partners, possible co-GPs, get in contact with you?
Yeah, I would love to connect with anybody interested in learning about or investing in triple net properties. You can visit my website and sign up for our investor club. It's at roosterequity.com. I also have an ebook called Mission Matters. I also found at roosterequity.com/book.
Awesome. Yeah, and we'll link that in the description.
Sounds good.
Sweet. Thanks for coming on, Ben.
Thanks so much.
Bye.